Last year, tech giants committed $400 billion to AI infrastructure, spending more on data centers than the global market spent on building single-family homes. Yet, for all that investment, over half of the major sites intended to house that hardware have been delayed or canceled. This massive capital spend has hit a wall. Projects are stalled by hardware backlogs and the hidden, staggering cost of manually verifying the software's work. How did a multi-trillion-dollar digital revolution end up bottlenecked by aging power grids and data that doesn't reflect reality? The crisis is physical. Economic and power infrastructure is buckling as it tries to scale software that was never designed for the constraints of the real world. The industry is pivoting from simple linear bots toward a continuous cycle of perception and reasoning. These systems are designed to observe an environment and take independent action across real-world workflows. That constant cycle of perception and action requires massive compute power, triggering a frenzy to acquire high-end graphics processors. This has triggered a classic bullwhip effect. Companies are panic-buying chips just to secure their place in line, often before they have any place to put them. Those chips are sitting idle in warehouses because the data centers intended to run them are still waiting for the heavy electrical transformers needed to connect to the power grid. It is a lethal economic imbalance. Corporations are stockpiling hardware that depreciates every day it spends in a box, waiting for a grid that isn't ready to support it. If autonomous action is the goal, we have to look at why these agents are failing so expensively in professional environments. Hallucination benchmarks reveal a paradox. Models optimized for deep reasoning fill gaps with plausible lies, spiking factual error rates to 50%. This financial tax caused $67 billion in global losses last year, costing enterprises $14,000 per employee to verify AI outputs. Despite that oversight, the errors escape. Nearly half of corporate AI users report making major business decisions based on content the models simply made up. These failures are entering our institutions. We are seeing AI agents generate entirely fake case citations in court filings, producing fictional rulings with realistic names that waste the time and resources of the entire legal system. The promised productivity gains are being entirely swallowed by the tedious manual labor required to babysit the software. Tech giants are masking this friction with an accounting trick. They are depreciating their hardware over 6 years on their balance sheets, while simultaneously marketing that next year's chips will make today's models obsolete. Those financial projections are hitting a physical wall. To run these centers, companies rely on natural gas, a fuel that has recently doubled in price, drastically increasing the cost of keeping the machines on. The physical reality is catching up. Over half of the data center capacity announced for 2026 is currently delayed or canceled. A margin squeeze is coming. As energy costs rise, it will soon cost more to power last year's processors than the revenue those processors can actually produce. The industry is running out of the physical power to run the machines and the financial runway to hide the math. The danger peaks when these hallucinating agents are integrated into global financial markets. When millions of agents are granted autonomous trading authority, they execute transactions at machine speed, outside human approval cycles. Because these agents rely on concentrated infrastructure, a single instance of memory poisoning cascades through the entire network, triggering correlated failure across multiple institutions. Without constant human oversight, these interconnected systems are essentially unstable. We are building a financial system dependent on intelligence that hallucinates, an infrastructure that doesn't physically exist. It is a perfect architecture for systemic collapse. The physical world has finally placed a speed limit on artificial ambition. If these systems cannot expand into new data centers, we must look at what happens when they turn inward, moving onto our personal devices.